Yes. I mean, speaking about people who study what they buy, right? So the news of the week was Dan Loeb, who was this semi-famous, actually really famous activist investor. He disclosed that he took a $750 million stake in Shell. So a few percent market cap, but nothing too big. And what he asked, what he said is, look, Shell needs to be broken up, right? You have your legacy oil and gas, that's great, that makes money, but people don't like it. You have your renewables and LNG, which isn't as profitable, it's a lot smaller, but people like it. And if we look at comparables, it's really cheap. You are locking up shareholder value. Please break it up, right? You should split your company into two, essentially. The oil and gas business, which is the oil business, actually, which is old and you'll die a natural death in 10 years, but let's squeeze money out of it while we can. And, the renewables and natural gas arm, which is new and has a high multiple and people get value out of it. That's it. The management obviously wasn't happy, right? It takes away their power. But yeah, it's just been, fighting it out in the media about what should happen to a business like Shell's, right? Because they have the old parts, which we don't like now. They're pollutive, but they make money. And the new parts, which takes time to make money, and are capital intensive. But at the end of the day, we want to expand that and we want to, move in that direction. Yeah. So yeah, I think that's just a bit of interesting news and a bit of, I guess, corporate structuring about how.
And this news came out last week, was it? Or a few days ago? I
think it came out mid last week, I think.
Got it.
After our previous episode. Otherwise, I would have spoken about it.
With regards to this, tell us more, right? He says it should be split up because of sentiment, or because of the fact that, these two effectively are not congruent and should not be run together, or is Shell just too big?
Yeah. No, so I think he looks at it from a valuation perspective. He goes and says, look, your LNG and your renewables business has a run rate of, I think, 2.5 billion. Comparable natural gas companies have, price to sales of 10. That brings you to 250 billion.
Sure.
Sorry, I'm getting decimals mixed up, but gist of it is your LNG business using a comparable is the current enterprise value or the current market cap of your entire Shell. There is a lot of value here, right? If we value just your new business like another new business, that takes up your current new business and your current old business. And your current old legacy business is again in the billions of dollars and should have some value to it besides zero. So he's saying that the market is ascribing the wrong value to it. I'm not a value investor. I'm not going to wait for the market to wake up and be rational because seriously, the market is irrational. I mean, okay, that's my view. The market is irrational now. But so break it up. The market will recognize values in each sector because there are people who want oil and gas, oil assets, who want to make money for 10 years, right? So both parts will have value, and as a shareholder, I win, right? So
he's looking to actually split it and actually list both as well. And have effectively two separate stocks and two separate tickers.
Yes.
One for stock, one for alternative forms, alternative energy, if you will. Got it. Well, what is your take on this? Do you think this is something that Shell should be worried about? Shell should be thinking about?
Yeah. I mean, look, management will never agree to this, right? And management has a point. The whole idea is to use it's like Amazon and AWS, right? You have a money spinning part of the business and you use it to subsidize and to get a flywheel going and whatnot to build a new part of the business, right? So you don't have to borrow, you don't have to do capital raisings, you just use your free cash flow and build. And that's essentially the argument behind Shell. I have a huge cash flow generating business. I don't know how long it'll last. And but I'm going to use it to build alternative energy. And that's the reality compared to breaking it up, right? And subsequently with my new company, I have to go to the capital markets. I have to raise debt, which has cost of equity, or I have to raise either debt or equity, right? I need money somewhere. So yes, capital markets are cheap now, but I'm sure I have investment grade rating. Debt is cheap for me too. I don't see how much lower the cost of capital can be. So honestly, I'm sympathetic with management here. I think size also has perks, right? If there's a slowdown in oil and gas, you can move your engineers over into alternative energies. Essentially, you have the same workforce. You can switch them around. You can do some shared services thing to rationalize it and make it more efficient and have cost centers and all of that. Silly stuff that nobody really wants to talk about, right? But I think that in reality, operationally, it makes a bit more sense to have one entity and to try to leverage off the size and the economies of scale rather than to have two or more entities and find a way to make it work. So it's a nice idea. I think from a shareholder value maximization perspective, it works. It's great, but to run a company that way,
in my sense, it doesn't make sense, right? When we think of it as an investment, and what they're doing, Shell, in moving into alternative energy is not only an investment, it's actually a pivot, right? You can call it an expansion now, but I do think that they're seriously looking at it as a pivot, given all the climate change, sustainability, as well as all the awareness that comes with that. Moving forward, right? I think the Tesla stock price alone will tell you where the world is trying to move towards, right? And what effectively Tesla believes in. But it's not about Tesla, right? Yes, fair.
It just tells you how crazy.
And that's the thing. When if you just take care of it as our perspective, right? I agree with management that it should not be split. That's my take. And the take is very simple. I have something that is going to give me the foundation for me to go and do something else. That something else has not been proven. Until I can prove an MVP for it, I can know it can run on its own. Then I'm going to effectively maybe create a new entity, maybe create a new subsidiary, become Shell Holdings, whatever it may be, right? And then run a separate ticker, whatever needs to be done. But until then, it's still a kid. It's an infant. It's not in the fetal stage right now. Maybe it's an infant or a toddler, but it's not an 18-year-old adult. And that is something that I cannot get grips with sorry, what's his name again? It's Dan Loeb. Yes.
Loeb. I don't know. I don't know how to pronounce his last name, so let's call him Dan.
So that's right. So that's the way that I see it. But that's coming from a corporate perspective. If you're looking at purely as an investor perspective, I can see it. He thinks there is a short-term gain to be had if this was purely an oil play. Because, right, oil will be skyrocketing the next couple of years with all the travel, with all of this, all of that he can make big gains. And it's going to be hindered with this infant of a child. Effectively, if you're having a child, you can't do what you wanted to do if you were single, right? Or if you were just you and your wife. Exactly.
Agree as a parent.
There'll be some people that will say, you can get married but don't have a kid. And I feel, and that's my analogy for Dan, right? Because if you don't have a kid, you have more spending power. You can spend on what you want to spend on, and you can make more money, right? When you have a kid, a lot of that money is going towards that kid to fund its effective investment, if you will. So speaking, Anthony, as a parent, I can see why you're leaning towards management. And that's my take as well. That's it, though. I did see... Sorry, that's it, though. I did see the stock price drop from... 21 till now. It's okay. I mean, not very much, but 19 in about two to 3 days. I assume this is when the announcement came out, and maybe there's some sort of confidence issues among the investors, or not really.
Yeah, I mean, I think the reality is that unless you are a badly run company, if an activist investor comes in, it's just disruptive, right? And if you want to get an idea of how disruptive it is, go watch Succession on HBO. Right. Fantastic show. If you haven't watched it, so yeah, tip of the day, right? Look at Shell, watch HBO Succession.
Yes. And I think that's also great for our listeners and coconuts out there. When you are looking at investment and retirement, right, you want to build effectively and create that foundation first before going into all these expensive or unproven assets, right? I mean, one of it we just spoke about was the Squid Game. If you put $100 in there, or if you put $1,000 in there, and it doesn't mean anything to you because it's play money, that's fine because you already have your foundation. You already started that flywheel. So I think it's something to think about.